let's start with the Nifty 50 analysis for today. So as we have said, like we have to mark the important levels in the daily time frame. So here are our important levels for today. That is previous swing high, which was taken out yesterday, and again previous swing low is this one. So we have to mark again previous day high and previous day low for our current market scenario. So previous day high was here and previous day low was here. It is already marked. Okay, so the previous swing high was taken out and it was an important resistance though. We can consider previous day high as a previous swing high for today's market scenario. And we have a pattern here. It's like when the market opens gap up and closes with a strong red candle. Here you can see there are two continuous red candles which are very huge. So that indicates that still bears are in control of the market. We have been discussing yesterday that the market scenario is currently bearish, not exactly bearish though, like it's under consolidation with bear fights. For a bulls to take over, like these kind of candles should happen. So we have a strategy in our trading strategies. When we have a opening with a huge red candle, we can enter the short trades, that is a PE trades. But the thing is here the stop loss will be huge. So what we have to do is we have to wait for the retracement, that what we call red candle retracement. So again, when the price comes around these levels of the red candle high, we can go or we can look for shorting opportunities. So we can see here there is a hammer kind of candle which indicates of the price is being pushed towards downside. So once this doji candle low is taken out, we can have our stop loss here and we can book 1:2 or over here. But the thing here is as we can see there is a CPR here. CPR can act as a very strong resistance or support. So that's where most of the price action tradings happen in the markets. So instead of taking a trade, to be a safe trade, we can avoid this trade. But if you stay in the markets for a longer period of time, you will understand that the sentiment is currently sideways to bearish. Until unless there is huge consolidation at these levels, we can expect that bearish will be in control. So the strategy works fine. We have booked 1:2 hour over here. And again, you can see, if you can refer my yesterday's videos, I have said that if there is a breakout with here I have said in the Nifty bank chart, if there is a breakout with a proper candle, the CPR breakout, that is one more strategy we use to trade in the daily markets in the indices. So here there was a huge Mariposa red candle, which indicates that it is a proper breakout. So one more trading opportunity would be when the low of this breakout candle is taken out and the stop loss can be just above central pivot point. Okay, so this pink dotted line, what you can see is a central pivot point, and here there is important resistance, which is previous day low, that can act as resistance for today market scenario. But it that breakout was good, we can expect at least 1:2 hour ratio risk reward. Always keep in mind that no matter how many resistance or the supports we have, always focus on booking 2 hour ratio, because in the long run, even if you have a winning rate of 50%, you will be in the profit at the end of your uh, trading month. So that's how the risk reward and psychology works with respect to the market. So again, this was one more trade. So we have got two good trades as of now. And it looks like a average CPR to lower CPR, because compared to yesterday was a white CPR, which indicates the market may be in the sideways range. But it is an average CPR that indicates that market may be in the trending. That gives an overview of the market structure for current scenario. In that case, we can look for a 20 EMA retracement. That is also one more strategy that I use to trade in indices. So here you can see exactly this is a 20 EMA line that I have drawn. Exactly that's the place where the market took retracement. So that can be a re-entry opportunity for current scenario. So one more interesting thing here is that there was a unique star pattern. So unique star pattern, as yesterday also it happened here, you can see. So like that it happened today at the very important level, that is 20 EMA retracement. So again, if you are still in the trade of this one, the stop loss was here and the target was here, what we can do is we can still enter again, like that's what we call adding to the winning position. So again, the another setup was satisfied over here. that stop loss can be here, and again we can book 1:2 or you can see in the charts. Yeah, these are the three important price action entries that happened in the Nifty 50. And yeah, one more thing is there was a kind of head and shoulder pattern again. So there are few patterns that will be happening every now and then. So head and shoulder pattern is the most commonly occurring pattern in the markets where there is strong uptrend or a strong downtrend. So here was a proper breakout with the Mariposa candle. That entry can be once the high is taken out, and the previous swing low can act as stop loss. So the target could be 1:2 hour. And yeah, with experience, you can notice that the 1:2 hour is achieved in all the four trades that I have given now. One more thing, like there was a huge momentum over here. How we can book such huge momentum in the markets? So there is strategies like 8 EMA retracement or not EMA 9 EMA retracement. But one thing you can observe is since a very long period of time, the trend is bullish. So the markets are in a good sentiments as of now. As for international markets is concerned, India is under a positive response. So whenever there was a bearish opening, so you can see this, there was a bearish opening here, but at the end of the day, the again day's high was reached. So that's how we can see that the market is in the like in the bullish trend. So here also we can see that there was a huge red candle, but market again retraced back to the same levels. Again it went down, and again it while closing time it came back again to the day side. So that is the trend happening for the past few days. So we can conclude that the market may reach again to the day side. So that's what happened. If you are experienced enough to understand how the market structure works in a recent market or how the international market scenario is, so that's how we can book huge targets. So these were the trades. I have given the charts in the Instagram page as well. You can check out Trader in the link description given below uh, to understand what are the important trades that I have discussed right now. So let's come back to the Nifty bank analysis. Yeah, you can see that I have marked, we have to start again with the important points, that is previous swing high, previous swing low in the daily time frames. So this was a previous swing low already been marked, and this can act as a previous swing high. Okay. And again, for the current day, previous day high and previous day low are the very important levels. This was the previous day high and this was the previous day low. So here what we can see is there is a, at this point in time there was a support. Okay, so you can see that there is a kind of a double bottom thing here. You can notice one touch point, two touch point, and this form a double bottom pattern. So if there was a scenario like there was a breakout with a green candle like this, so that could be a very good entry opportunity for today. But it was a resistance. It acts like a resistance. So we have to look for bearish opportunities. So since it wasn't taken out, so one more trade opportunity would be at this level where this was a support acting as a support. So here was the support was taken out. We can, so the trading strategy we can call here is a simple support line breakout. Okay, so the stop loss can be here. Since the breakout candle was used, we can, like, it would be not a wise trading decision to keep our stop loss at higher points. So we can see the previous day low can also act as a resistance, but always keep in mind, though matter what the resistance or supports we have, always go for 1:2 hour ratio. Like 70% or 60% of the time, these pattern records or price action records will always give at least 1:2 hour. Okay, so that won't be an issue for you. You can stick to your psychology that always maintain 1:2 hour ratio. And again, when the market retraced back to 20 MA retracement, again there was a support, there was a resistance, and there was a 20 MA resistance as well. So this could have been one more trade opportunity, but the thing is there was not a proper retracement. So the candle should at least get a rejection from here, at least the wick should touch as per the strategy. But yeah, with experience you can know whether to enter a trade or not, even though if it doesn't satisfy 100% of your conditions according to your strategy. So one more strategy can be here. You can see that there was a little bit of consolidation along with the as I said, like these head and shoulder patterns occur very now and then. So this was again one more head and shoulder pattern which gave a breakout. So yeah, this is how the trading works. And the target, the breakout candle was like a very good breakout candle, mariposa kind of candle, like not exactly, it shows a pure bullish sign. And yeah, 2.6, more than 2.6 it gave, but we can book only 1:2, or that would help us in the long run, so that your psychology will be maintained. You don't have to worry about the running profits or losing profits and all. So another thing is here there was an important resistance as well with the trend line, and it gave breakout here also. So always the market timing is almost over by this time, so you don't have to hold the trades till the market closing hours, because it's always wise to stay away from the market after 3 o'clock, because you are not sure that the market may hit the target or it may not hit the target. So there is a chances of paying only brokerages when you end up with the break even trades. So and also you can see you were in the bullish trades for now, like when the head and shoulder pattern happened, there was again a little retracement, the retracement again a huge momentum. So the you can see the time here, it was almost 3 o'clock. So that's the timing where the market closing will be happening, or huge positions will be covering up. So that might affect the retail traders. So had you been in a PE trade, like again if you're still holding your trades without any like trailing the stop loss or without any proper stop loss, you would have blown up your account, or you may have lost all the profits which you have booked till this level. So yeah, these are the market analysis for today. So I have shared the charts along with entry and exit points with a detailed explanation in Instagram as well. Do check it out. And yeah, that's it for today. Thank you for watching.